This video is a review of Takeda's fiscal year 2024 full year financial results from April 2024 to March 2025. Takeda Pharmaceutical Co Ltd is Japan's largest pharmaceutical company and one of the biggest global players in the industry. FY 2024 results. In fiscal year 2024, Takeda achieved revenue and profit growth, despite the negative impact of generic competition for its key drug, V-Vans. The company's newer medicines, known as growth and launch products, performed strongly and helped offset the revenue decline from V-Vans. Takeda's core revenue reached 4,579.8 billion yen, which represents a 2.8% increase when adjusted for currency fluctuations. Growth and launch products accounted for 48% of total revenue and grew by 14.7%, showing strong demand and momentum. The company's operating profit margin improved to 25.4%. However, core net profit decreased by 3.4% to 775.6 billion yen. In fiscal year 2024, revenue increased, but net profit declined. CEO previously mentioned, fiscal year 2024 will be the final year of declining profits, and fiscal year 2025 is expected to be a turning point, supported by the impact of new drug launches. Takeda's global manufacturing is centered in US, Europe, Japan, and Singapore. Takeda's exposure to tariffs is influenced by factors such as the revenue contribution from imports, the location or country of origin of manufacturing, and its transfer pricing policies. Based on current assumptions, Takeda believes that its potential exposure to US and China tariffs is limited. Approximately 50% of Takeda's total revenue comes from the US, but imports into the US, mainly from Europe, Japan, and Singapore, account for only about 8 to 10% of that revenue. In China, which contributes about 4% of Takeda's total revenue, imports from the US represent around 12 to 15% of Chinese revenue. The company operates a global manufacturing network with 22 internal sites, 20 of which supply the US, including 7 located within the US. In addition, strategic contract manufacturers are spread across the US, Europe, and Japan, with around 70% of CMO contract manufacturing organization spending going to US-based partners. To manage any potential tariff impact, Takeda is implementing mitigation strategies, such as inventory and supply chain management. FY 2025 pivotal year for late-stage pipeline launches. FY 2025 is a pivotal year for Takeda as the company prepares for potential launches from its late-stage drug development pipeline. Takeda reported positive Phase 3 results for rusfertide, a treatment for polycythemia vera that helps rapidly and consistently control red blood cell levels. The drug has the potential to reach peak annual sales of $1 to $2 billion. The company also completed Phase 3 patient enrollment for oveporexton, a treatment for narcolepsy type 1. Oveporexton's peak revenue potential is estimated at $2 to $3 billion. Additionally, Takeda is advancing zasocitinib, which it considers its most important upcoming drug. Zasocitinib is an oral treatment for atopic dermatitis, with expected peak annual sales of $3 to $6 billion. If approved, these 3 new drugs will become a new and stable source of revenue, so the results of future evaluations will be important. Donald Trump executive order to lower drug prices in U.S. President Donald Trump signed an executive order with the goal of reducing drug prices in the United States. The order gives pharmaceutical companies a 30-day window to voluntarily lower their prices, or they may face future government-imposed pricing limits. In addition to domestic measures, the order also aims to pressure foreign governments to increase the prices they pay for medications, thereby reducing the pricing gap between the U.S. and other countries. After this news, the stock prices of pharmaceutical companies, including Takeda, dropped significantly. As with the tariff issue, the details are still unclear, making the outlook uncertain going forward for Takeda. FY 2025 financial outlook. Takeda expects fiscal year 2025 to be the final year significantly impacted by generic competition to V-Vans, while the company prepares for upcoming product launches from its late-stage pipeline. Revenue for fiscal year 2025 is forecast to be 4,530 billion yen, which is a slight decrease compared to the previous year. Core operating profit is also expected to slightly decrease by 1.9% to 1,140 billion yen, and core earnings per share is forecast at 485 yen, broadly flat. Adjusted free cash flow is projected to be between 750 and 850 billion yen, and the company plans to maintain an annual dividend of 200 yen per share. Key assumptions behind this forecast include a significant decline in global V-Vans revenue, down 30% year-on-year to 241 billion yen on a constant exchange rate basis. The forecast does not yet factor in possible effects from new U.S. or retaliatory international tariffs on pharmaceutical products. Exchange rate assumptions are 150 yen per US dollar and 160 yen per euro. The impact of U.S. tariffs has not been reflected yet, and the exchange rate assumption of 150 yen is also relatively weak compared to other Japanese companies, so it is possible that the forecast may be revised depending on future market conditions. Efficiency Program. Takeda is enhancing organizational agility through structural changes that have impacted approximately 3,000 positions so far, including efforts to optimize spans and layers. The company has exited its R&D site in San Diego and transferred divested manufacturing sites in Austria and Japan. Takeda is driving procurement savings across areas like contract manufacturing, R&D services, marketing, facilities, and IT, while also enhancing its data, digital, and technology capabilities by expanding innovation capability centers and applying data and AI across its operations. In fiscal year 2024, restructuring costs totaled 128 billion yen, while the company has captured around 200 billion yen in annualized savings to date. Cost reductions have progressed significantly through measures such as workforce reductions as part of restructuring efforts. Entyvio. In FY2024, Entyvio generated revenue of 914.1 billion yen, reflecting 8.5% growth year over year. In the U.S., Entyvio remains the #1 brand for IBD, inflammatory bowel disease, maintaining a stable patient share over the past year. Entyvio's growth momentum is accelerating, supported by the expansion of the Entyvio pen. The Entyvio pen is a pre-filled, self-administered injection device that allows patients to conveniently inject Entyvio at home for the treatment. The revenue is close to 1 trillion yen, and it is likely to remain a key pillar of Takeda's earnings in the future. V-Vans. In fiscal year 2024, V-Vans revenue declined to 350.6 billion yen, a 21.6% decrease year over year, mainly due to the loss of U.S. market exclusivity in August 2023. V-Vans, a treatment primarily for ADHD, has been a major revenue driver for Takeda, especially in the U.S. market. However, since generics of V-Vans began entering the market, Takeda has faced a significant decline in revenue from this product due to increased competition and falling prices. Outside the U.S., V-Vans is also facing generic competition, with loss of exclusivity occurring in Canada, Brazil, and Germany. Takeda has stated that fiscal year 2025 will be the final year of this significant generic impact, meaning that the most substantial loss of V-Vans revenue is expected to occur during this fiscal year. After that, the erosion will likely stabilize or become minimal. However, Takeda expects the amortization of V-Vans to conclude in January 2026, which means that the company will finish accounting for the drug's acquisition cost by that time. Once the amortization ends in January 2026, Takeda's financial results will benefit from the removal of amortization expenses related to V-Vans, improving reported profits. Although revenue has declined due to the patent expiration, V-Vans still remains an important part of Takeda's overall earnings. Committed to growth and shareholder returns. Takeda tries to create sustainable value for patients and deliver attractive returns to shareholders. The company plans to invest strategically in key growth areas, including internal and external opportunities to strengthen its pipeline, support new product launches, and expand its plasma-derived therapies business. In terms of shareholder returns, Takeda follows a progressive dividend policy, aiming to increase or maintain the dividend each year. For fiscal year 2025, the company has proposed raising the annual dividend to 200 yen per share, which is an increase of 4 yen from the previous year. It will also consider share buybacks when appropriate to enhance value for shareholders. It is concerning that the dividend per share exceeds earnings per share, resulting in a payout ratio of over 100%. But it is also a positive sign that the company is strengthening shareholder returns. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,099 yen as of May 19th, and the US dollar stock price is $14.23 as of May 19th. The stock price temporarily dropped when there was news about Donald Trump's tariffs or drug prices, but recently it has been on an upward trend again. Current PBR is 0.92 and PER is 28.1. Dividend yield is 4.88%. Compared to previous years, all PBR, PER, and dividend yield show that the current stock price is relatively cheaper. Over the past few years, profits have been falling and EPS had also declined, but Takeda is expected to rebound this fiscal year. Consequently, this profit recovery is reflected in the current PER, making the stock look relatively undervalued. Conclusion. In recent years, Takeda has been experiencing decline in both revenue and profit, making it a difficult period for the company. However, starting from fiscal year 2025, Takeda's business performance is expected to show an upward trend. The decline in profits from Vyvanse appears to be stabilizing, and the company has plans to launch several new drugs. Additionally, cost-cutting measures through workforce reductions as part of restructuring have started to show positive effects. Additionally, Takeda continues its progressive dividend policy, maintaining stable shareholder returns. Although there are some concerns that could affect Takeda's performance, such as Trump U.S. tariffs and executive order for drug price reductions, the approval of new drugs seems to be a key factor for the company's recovery going forward.